I'm a structural engineer, so you get a little bit of a different flavor when you get the structural engineer. And I tend to get questions that are very individual to your houses or the houses you know, and that is fine. I absolutely don't mind being interrupted. Sometimes if you're thinking about a question, though, it might be kind of ahead in the presentation, but if I do say something where you're just thinking, I have no idea what she meant by that, absolutely interrupt me. I love a dialogue. So as a structural engineer, I was working as a consultant, and this job flashed across my screen, and it said California mitigation and homeowners, things that I'm passionate about, because there's a lot of engineering that goes into buildings, commercial buildings in California, and houses are kind of shunted off to the side because they don't kill people in an earthquake. And when you're looking at kind of structural triage, you're looking for those buildings that are the most dangerous first. However, if you think about it, single most expensive thing that most of us will purchase in our life. And we call it a home for good reason. It's where our family resides. So let's talk about earthquakes. We'll talk about insurance and mitigation. And I wanted to just start that we're a not-for-profit, very unique organization. And I'll tell you a little bit about what we're doing and who we are and how that program might benefit you. California is an earthquake disaster waiting to happen. Last year, of course, my husband actually is originally from Santa Rosa. His parents lived there for many, many, many years. So I'm very familiar with this part of the coast. And of course, we had tremendous disasters last year, particularly in Northern California. But the earthquakes happen in California. And sometimes they go for a little bit longer than usual. And we forget about them. They're high consequence, low probability events. But you can see the entire coast of California is the San Andreas fault system. We're right on the edge of the tectonic plate. And there are thousands of known faults in California. And most Californians live within 30 miles of an active fault. So our population, when you overlay a population map, it's right on the faults. Of course, we all gravitated towards the water. And think about the geographic things like the bay and the ports and all those things are actually features of tectonic actions. Most Californians do not have earthquake insurance. And so I'll tell you a little bit about who the CEA is and why we were created and what we're doing. But when we talk about earthquakes, I think one of the most important things to do is to debunk. I love the word debunk. I don't quite know what you guys are doing with your debunking, but I'm going to try and debunk some myths. And so the first myth is that the risk is real. Sometimes they'll skip a generation, these earthquakes, and so you don't hear about it from people you know and love, perhaps your family, and you don't think it'll happen to you. That's a really common problem. But the reality is that there's a near certain probability a magnitude 6.7 or larger will happen in California in the next 30 years. 6.7 was selected because that is the Northridge earthquake size. And it's that weird Richter scale, so 6.7, 6 to 7 is not, the same as 7 to 8 or 4 to 5. It's logarithmic. And that, as I said, a near certainty. It's actually larger than 99% chance. So I'll go back to 1906, an earthquake we all are aware about. We all think it was the fire kind of overshadows sometimes, but there was tremendous amount of damage. And if the 1906 San Francisco earthquake reoccurred today, strong shaking would be felt by more than 2 million single-family residences. So when a fault ruptures for an earthquake that large, you see a little dot on the map as an epicenter, but the reality is that the fault rupture could be 250 miles long for an earthquake of that size. It was just about an 8. So from Eureka to Salinas, this would be a Northern California earthquake, not a San Francisco earthquake. 250,000 households displaced. And there's a 72% chance of a magnitude 6.7 or larger happening in the Bay Area in the next 30 years. So you can see that the chance goes down because, of course, the geographical location, but it's still very, very high. 51% chance of magnitude 7. And as I mentioned, with that logarithmic, that is actually 3 times stronger than Northridge. So it would rupture a longer segment of the fault, and it would generate ground shaking, very strong ground shaking for a longer time. So you can imagine that things that are vulnerable will be damaged. San Francisco, getting back to the San Francisco earthquake, if it happened again, $175 billion. Yes, sir. So the 1994 Northridge earthquake that happened down in the San Fernando Valley was a magnitude 6.7. Yes, I don't know if you remember the Northridge Meadows apartment complex fell. Most of the casualties were actually in commercial buildings. There were a couple of single-family pole houses that fell. I don't remember the actual amount, but I do have a dollar amount for the damage as we go further. So 175 for that 1906, with only $15 billion insured. $160 billion, we can call this in self-insurance. I made this map, and it'll give you an idea. So here's our San Andreas Fault along the outside. And you and I share really the same fault. We call it the Hayward, you call it the Rogers Creek. Just like dead ends right in the middle of San Pablo Bay, and they, for a long time, weren't sure that they were the same fault. It just looked kind of fishy. And recently, they really do believe it's the same fault. And it comes right through Petaluma, of course. And so here's the magnitude 6 South Napa that I'm sure you all felt. We certainly felt it. I live down here in Piedmont. And the 1906 earthquake, this is the epicenter. Once again, the fault ruptured all the way up to Eureka and down to Salinas. And then you all felt an earthquake. Did you feel the geysers? Some of those small ones, you don't feel them that far away. But the geysers, we think about Oklahoma and Texas when we think of induced earthquakes. Many of these are induced earthquakes it's not the pumping out of water that happens, it's when you put the wastewater back in from either oil, or in this case, it's geothermal. And little earthquakes happen there all the time, and every once in a while you'll feel one that's a little bigger. So here you are. Here's that Rogers Creek Fault. It's over here on the eastern side. When you see an area like this that has kind of hills here, and this is kind of flat, that is alluvial. What makes incredible farming that's been going on here for many, many years. And that, of course, can be prone to some soft soil. So, I think many of you may have seen this picture before of Santa Rosa. Was devastated by the 1906 earthquake. Not a huge population along the coast, but for the areas that were, single-family dwellings. And here's single-family dwellings in the 1989 Loma Prieta earthquake. So that's 6.9. This is up in the Santa Cruz Hills, and I believe this was in Watsonville. So, the risk is real, but so is the benefit of earthquake insurance. So let's confront a couple of other myths that'll help you put it into perspective that, this is something that I should worry about, something that I can do something about. People think the government will bail me out. Well, the reality is that when FEMA comes in, government assistance works like this. If you don't have means, well, everyone can get a little bit of money for what they call safety and health. If your house is completely damaged and it's detrimental to your health, you can get a grant. If you have means, if you're currently paying a mortgage, they route you to the SBA for a low-interest loan. Typically around 2%, you must pay that back. I think the average in most disasters is about a $3,000 grant from FEMA. Another myth, my residential policy will cover me. Well, the reality is in the 80s, they specifically took earthquake insurance out of your homeowner's policy. You must have a separate policy. And for those of you who might be in a flood zone, it's the same for flood. So you need to really, I just read my policies recently, I'm embarrassed to say, and I highly recommend it to everyone, but they will find out that earthquake and flood are not included in your homeowner's policy. This myth, I'm really excited to say it's no longer true. Earthquake insurance, and I think I said this before I joined the CEA, costs too much, has too little coverage, the deductible's too high. In 2016, we made some tremendous changes, and I think you'll find that all of those are now myths that could be debunked. We were an interesting not-for-profit residential earthquake insurer. Very, very interesting. Created in 1996, but this is the reason why. Is 1984, the state legislature passed a law called the Mandatory Offer Law, so that if you write a homeowner's policy in California, you must offer earthquake insurance. Homeowner is not obligated to buy it, but you must offer it. Any insurance professionals in the room? Yeah, so I don't know if you insure homes? Yeah. So, but nobody was really modeling them. We didn't really understand the risk. And so in 1994, when the Northridge earthquake happened, they lost their shirts. There was not proper modeling. The premiums were really low. I think my house in Oakland was $250 was the policy. Everybody had earthquake insurance. I think half of the people in the Los Angeles area had earthquake insurance. Magnitude 6.7 happens. It was up a little bit since this headline. And once again, the insurance companies were hit hard. $40 billion worth of damage, half of that insured, half of that residential and half of that insured. $10 billion that they didn't really sign up for. And so with that mandatory offer law, they were leaving the state. Without an insurance market, there is no lending market. It was a catastrophe for the state of California. So 13 of these participating insurers, I can always remember that number because, of course, it corresponds to our 13 colonies. We now have over 22 make up the California Earthquake Authority. We call them participating insurers. So you may see your insurance company on here. If your insurance company is not on here, they will offer their own insurance policy because, once again, they have to. We don't consider other insurance companies competitors because we were created by the state of California to provide earthquake insurance and to get as many Californians insured, and so we all feel that we're in this together. Unique, publicly managed, privately financed. Publicly managed means our board is comprised of the governor, insurance commissioner, and state treasurer. Now, we've never had Jerry come to our meetings, but we certainly have had Commissioner Dave Jones and State Treasurer Chung have attended. They send designees, but it's publicly managed. And so we operate under a state, it's like the Brown law, it's called Bagley-Keene. All of our meetings are noticed, they're public, and all of everything that we do is public, but privately financed. With over 1 million policyholders, the financing comes from when a participating insurer joins, they bring a certain amount of money, and then, of course, the policy premiums have accumulated over the years. The nice thing about that is we're not a part of the state funding, not part of the budget. So in 2008, when the state of California had a bad year, they can't dip into the California Earthquake Authority's funding that is preserved for policyholders who may make a claim. One of the questions people always have is, because you get that mandatory offer and it states that you may not get all of the money that you're due after an earthquake. Well, that's true. If there's an earthquake that is so huge that they have to start prorating, yes, that's very true. But let me tell you how huge that earthquake would have to be. We have $17.3 billion in payout capacity. We have just under $6 billion in capital, so cash in the bank. We have reinsurance, which is insurance for insurance companies, all out of country, like Deutsche Bank. A little bit of debt, and then the industry, those participating insurers are on the hook. We start from the bottom up. So Loma Prieta, if it happened today, would be about $1 billion in payout. That's our modeling. Northridge, $6 billion, 1906 earthquake would only be $9 billion. So you can imagine the size of the earthquake it would take for us actually to have to prorate after an earthquake. It would be the kind of the Dwayne Johnson earthquake. If any of you saw that outstanding scientific representation of an earthquake. So the reality is, yes, if you did have to be prorated, but you can imagine if you prorated to 80 cents on the dollar, 90 cents on the dollar, that uninsured neighbor of yours is getting zero on the dollar. So today we have lowered rates, coverage choices, deductible options. Let me tell you a little bit about those. Well, first of all, so we battle a couple things. We battle, like everybody, inflation. But your rate, that's determined by the type of house you have and where it's located, is multiplied times the replacement cost of your house. Not the estimated sale price of your house, but the replacement cost. That's gone up 170% in California. So all of the reasons that everything is so darn expensive regarding houses in California, we've been battling. But because we're a not-for-profit, we don't have shareholders. We don't have a profit that we have to generate. And so we've been able to take reductions in our premium wherever we can. And we do it through sponsoring science and for doing a lot of work to do that. So the policy originally, when it started, like anything comes out as a mini policy, personal property coverage $5,000, one deductible at 15%. Try imagine moving out of your house for $1,500 for any amount of time in the Bay Area, and then a mitigation discount of $0. There was no credit for if you retrofitted your house. And we now have tremendous, up to $200,000 personal property. I think the most popular is 5% to 25% deductible. Up to $100,000 in loss of use, so you don't have to move in with the in-laws after an event. And then a reward for retrofitting known vulnerabilities in houses, which I'll show you a picture of. So this is the most important, and we learned in the Napa earthquake that folks think of a deductible like they do for their car insurance. You don't have to write a check for this. You don't have to, when you go to pick up your car, you have to write a check to get the car. With this, essentially they adjust your claim, they figure out what is owed to you, and then they deduct your deductible, and then you get the remainder. So you're essentially self-insuring for this deductible. And that's important to people because it may take you some time to get that available to you. So needs and budget. The cool thing is we've been able to provide choices and options for your budget. And you don't have to take my word for it. On our website, we have a free estimate, a calculator, and all of our insurance companies are going to be offering you the same policy. So this is the number that they will offer you. And we don't sell the policy. So this is really just a calculator for you to have an improved understanding and vocabulary to talk to your agent. You would buy your policy through the agent, and after an earthquake, they would adjust your claim. So you click homeowner, renter, condo owner, mobile homeowner, in this case homeowner, and you fill in some information about your house. So we've used a zip code, we've used 1961, and insured value, remember not sale price, but insured value, 1-story slab on grade, and you click get estimate. For that 15% deductible, $764 a year. And then you can start to play with the various choices so that you have a sense. You go to that 5% deductible, less self-insurance, more premium, $1,369, and back to the other side, $518 a year. This is kind of like the catastrophic, okay, I'll self-insure for that 25%, but I would like to be covered in case of that huge earthquake. And then the other choices, obviously building codes have changed dramatically since your home was built. Masonry, veneer, personal property, and then that loss of use, you can go up to that 100K. So people have been responding. They're finding that this is in fact an opportunity to get the choices in the budget that they need. We used to grow by about 6,700 policies a year. We implemented this. First year, 52,000. Second year, 90,000. And we're on record this year to exceed that as well. So people are finding when they go online that it is not the insurance that they remember or they were told about, and they're finding opportunities. So once again, we don't sell, we just back and underwrite and sponsor. The earthquake insurance, you would get it through your agent. If you have questions about the insurance, you can certainly call the CEA, but your agent is the first stop. And then where do I come in? What is a structural engineer doing in an earthquake insurance company? So there are known vulnerabilities. And for example, if there was somebody here in the medical profession, you could look around the room and you could say, well, think about some of the reasons you might be vulnerable to poor health. That A word I'm constantly getting now at the doctor, the age. Your gender might indicate that there'd be one disease or another that you might have a propensity for. Your weight. I mean, just think about all the things that you are known vulnerabilities. It's the same in a house. I look at this house and I know that because of its age, because it's got a crawl space underneath, that it has a propensity to come off of its foundation in an earthquake. I also know how to fix that. And so we have a program, earthquakebracevault.com, where we provide grants to homeowners to fix just this issue. So let me show you why it's important. First, I want to answer a question I get a lot. Masonry chimneys, terrible in earthquakes, they all come down. If you have a chance, take it down, put up a box. You can't burn wood anymore, or we're going to get to a place where we're not burning wood anymore. So when people ask me, it's expensive to take them down. So it's kind of like if you're remodeling, if it's damaged, don't repair it. It should come down. Brace your water heater. It's the second most common reason for your house catching on fire after an earthquake. And the first one is when it comes off of its foundation. So this is really vulnerable houses don't have stucco. They have this horizontal siding. Stucco can also be damaged, but this is the worst. Here's that little short wall around the crawl space. It's called a cripple wall. And they have a tendency to either slide or topple. It can be very dangerous. You can see this front door has been blocked, and the gas line was severed. They did not have a fire. But if you had any kind of mobility issues, this would be a very difficult house to leave. And in the back, of course, it's moved as far away from that step. It's expensive, and it's beautiful old, homes that have been preserved. This house, 2.5 years, not yet reoccupied. This beautiful Victorian, this woman went to crowdsourcing to try and get assistance to repair her home. She said it was $300,000 bid just to lift the home and put it back on a new foundation. House to the right, no damage, no damage. I have to be very careful. Did not come off of its foundation. Every house is damaged in an earthquake because it just moves like crazy for, 10, 15 seconds. Wasn't red tagged because it had damage that was dangerous, was red tagged because of the neighbor. Now this house, you kind of think, okay, well, it didn't do too bad. The porch is kind of messed up until you realize that this floor used to be here. Yeah, so that house came down quite a bit. And I always say, even if a house comes down 2 feet, if your furniture is flying around as you drop 2 feet, if everything in your house is moving, I consider it to be very dangerous damage, and it's very expensive to repair. So how do you repair it? We'll show you 3 examples. One is that the floor sits directly on the concrete foundation. We call that a stem wall house. These are made, you can buy these at all kinds of different hardware stores. You bolt them into the concrete, you screw them into the wood, and then you put clips up here. Now your wood part of your house is connected to the foundation, the concrete part. You have a little bitty tiny cripple wall or crawl space wall. So once again, you can't get in there with a drill, so you use a foundation plate, and you're putting plywood on those crawl space walls to stiffen it. Gets a little taller, the plywood gets a little taller, you put in some vent holes. And now you can get in there behind the plywood with bolts. So typically it's that epoxy grout, it comes in 2 tubes and you put it down in it. Talented do-it-yourselfers can do this, as well as there are lots of contractors. So let me go back to this last picture. So, earthquake brace and bolt. We provide up to $3,000 to homeowners who are in zip codes where our program is. And we come out in January. We have a registration period of 30 days. And then there's a lottery to pull folks out of the hat. We used to be able to do all of our waiting lists. This is the first year that we're going to have a waiting list that's left over, which is exciting. It means that we've gotten somewhere. People are understanding. We're constantly looking to take our funding, which comes from 5% of our investment income, and leverage that. We've gotten money from the state before, and we're going after millions of dollars from the federal government. All those disasters generated mitigation funding. So we hope to be doing more than 2,000 houses next year. We will be in Petaluma. And don't tell anyone at my office that I came today without a single brochure. Just don't tell them. But if you go online and you can't even remember who was that person, where's she from, if you type in earthquake insurance, we always come to the top of the list because we write 70% of the policies. So you don't have to think of my name, you don't have to even think of the CEA if you just type in earthquake insurance. And in that it'll say strengthen your house. All of the information about this program is in strengthen your house. It's about, I'm going to tell you very quickly how much these cost. This is about a $3,000 job. We give a $3,000 grant. If you do it yourself, it's only $1,500. This is closer to $3,500 for, and this is a little bit more. When you get, the taller you get. If you have a house that's complicated, it gets even more. Statewide, it's about a $4,000 to $5,000 job. Southern California is half as expensive as Northern California. How's that? That's all labor, I think. So I always tell people, get 3 bids, tell them you're getting 3 bids, do it like any other thing where you try and get the best price you can. But you can imagine a $3,000 grant for something that costs $5,000 to prevent hundreds of thousands of dollars worth of damage. Now, people always say, okay, once I retrofit, I drop my earthquake insurance, right? No. First of all, we've protected one particular vulnerability. That's the house coming off of its foundation. Your house is still going to be damaged because it's going to move. And that house above that first floor is still an older home. The idea here is we're trying to prevent damage where you have to move out of your home for as many as 2 to 3 years, hundreds of thousands of dollars worth of damage, put it back into an insurable category of damage so that your family is now protected and your finances are protected. And I will now be quiet and answer any questions that you may have. Questions? Yes, sir.
Where's that delicate line between the earthquake goes, the house catches on fire, and your fire insurance? How do they bifurcate that? Because almost everybody has fire insurance.
True. So if your house was totally destroyed by fire, that would be totally your homeowner's policy.
Right.
If it was somewhat destroyed by fire and or the water putting out the fire, you would have 2 claims adjusters on site afterwards. One is a fire adjuster, one is an earthquake adjuster. So you are covered for fire by your home insurance policy. Yeah. And people do joke sometimes about, so you light a match and we'll laugh and everything. I think all of us seeing the devastation of Santa Rosa realize that that's not even a funny joke anymore. And you know, forensics are so much better now that there's no way you do that. And somebody, yeah, yeah. I knew you weren't saying that. I just wanted to acknowledge the joke in the room that I've heard many times. Yes, ma'am.
Is there specific contractors in the
Thank you.
Yellow Pages that do this?
There are, and they're not just on the Yellow Pages. So actually, on our Earthquake Brace and Bolt site, anytime you can go online, put your zip code in, and it'll give you contractors within a certain radius of your site. We're just moving into Sonoma County, so we're starting to work on getting more and more contractors. We have over 1,000 contractors. Not all of them have done a lot of these projects, though. So when people pick up the phone and they get somebody who hasn't done it a lot, they tend to want to go to the guy who's done a lot. That guy's so busy that he's upping his price. And so I would say that there's kind of a group in the middle. You know, this is not rocket science work. So I always say, you know, call around, get a bunch of bids. You don't have to take that one guy who's done 6,000 of these. It's not rocket science. Yeah. Go ahead. Thank you. I love how these are two things I left out. I left them out just so you could have questions. Yes, so the code changes significantly in the late 70s. So houses that qualify for earthquake brace bolt are pre-1979. However, you will find between 1960 and 79 that you may not have cripple walls at all. You don't need plywood. You might just need a few extra bolts. You might be fine. Pre-1950, you really need to climb under your house and take a look, particularly pre-1940. You could have no bolts, no plywood. That's the worst of the pre-1940s. So think about, you know, kind of pre-World War II house, absolutely you need to look. I think it was here.
That was my question, too, kind of just to follow up on that. They come out and do the work to your house, what's the warranty on that work? Is that through the contractor or through the website? It's like if the house still falls off the foundation.
Right. So, like with all construction, what a contractor is doing is they are just building the house in accordance with a set of plans. The plans that we utilize are prescriptive plans that were created and are adopted into the code. So they're doing a code retrofit. So your house today, if it was damaged and it was built to code, it's unlikely that you can go back and sue anybody because you're getting essentially what was the best standard of practice at the time. So the contractor is licensed and bonded. We absolutely insist on that in our program. They're doing in accordance with the code. The code was designed by engineers that are doing it to the best standard of care. So if your house still comes off the foundation, I mean, obviously you can sue for anything, but the reality is that I think the statistics are that some houses that are retrofitted are going to come off their foundation. They're either, you know, built differently, but we have seen, I have a picture of that house that I said was unoccupied for 2 years. The house next to it was retrofitted, went through the Napa earthquake, did not come off its foundation. So we have seen it work. I just want to, there's always a caveat that even something to code, even a building that's designed and built to current code can be damaged in a huge earthquake. Yeah, we're getting close. So did I miss one?
Thank you very much.